Welcome back to Taxes Made Simple. I'm your host, Karlton Dennis, and today we're going to go over how to pay yourself as a single member LLC. If you're someone who has recently started a business, then you probably are thinking about setting up a single member LLC or a multi-member LLC if you're getting into partnership with someone. But in today's video, we're going to discuss exactly how you should be paying yourself as a single member LLC to not get yourself in trouble and to make sure that you're leveraging the tax law the way that it's meant to be leveraged. Let's dive in. Now, the first thing we have to understand about the single member LLC is the characteristics of the single member LLC. If you're a single member LLC owner, that means you have established a disregarded entity. A disregarded entity is no different than a sole proprietor business, which pretty much means is that you decided to start a business, but the only thing now that you've done is that you've separated the liability from yourself. Which means that you're no longer associated with just your social security number. You now have this EIN number that you get to utilize. The EIN number is taken to a bank where you can open up your business banking account. You can have a checking account, a savings account, and you can even establish yourself a credit card, even if the bank will allow it. Now, in order to understand how to pay yourself as a single member LLC, I'm gonna break it down very simple for you on a white piece of paper on my iPad. Let's jump right in. So what I have here is how to pay yourself as a single member LLC. And what I'm gonna do is I'm gonna go ahead and draw a line directly on the center of the page. I'm gonna put our single member LLC on the left-hand side. And I'm gonna go ahead and put ourselves, us. We're gonna be over here on the right-hand side, okay? So we completely separated ourselves from our business. Our business is sitting over here and we're sitting on the right-hand side, which means the liability is no longer associated with us. If something happens and someone wants to sue us, inside of our business, they can sue us, but they're going to sue only to the extent of what we have now that's sitting inside of this single member LLC. Now, let's just say that we started an online candle business, and let's say our candle business made $100,000 in the year of 2021. Well, if our candle business has accepted this money through our single member LLC, we need to make sure that we've accepted it the right way first. Now, if you have established yourself as a single member LLC, the government has given you a very important number. It's called an EIN number. And I view an EIN number almost like a social security number for your business, because it is. It's truly how your business is identified. It's the number that you present to your bank when you want to open up a bank account. And it's the number that you need when you decide that you want to grow your business credit or apply for a loan. So this number is going to be extremely important to you. The EIN number, however, needs to be set up, which means you need to go take it to a bank and you need to establish your business bank account. Now, once the business bank account is established and we have our candle business, we can accept this $100,000 through our single member LLC. But now the next question becomes, how do we pay ourselves? If we were to move money over to ourselves in our personal bank account, without doing anything formal or running payroll through any type of company as ADP or Karlton Dennis and Associates, then we have taken what's called a distribution. What a distribution means is that we've simply just distributed money to ourselves. Let's say that we decided to distribute $20,000 to ourselves. Does this mean that our business receives a $20,000 deduction over here? It does not. And part of the reason why our business doesn't receive a deduction when we're a single member LLC, writing ourselves a check, or just moving money over, or Zelling ourselves, or even Venmoing ourselves. The reason why we as business owners do not get a deduction for paying ourselves as a single member LLCs is because we aren't processing payroll with a payroll company, and we aren't taxed as an S-Corporation. When you're a single member LLC, you are just what's called a shareholder. And as a shareholder, you can take income to yourself and you can also pay your employees. However, when you pay your employees, you receive a deduction for this. But when you pay yourself, you receive no deduction. And this is what hurts a lot of my single member LLC clients, because they'll get into their business and start growing their finances, but then they get to a place where they want to start paying themselves, but they're not getting a deduction every single time they pay themselves. So then they come to their tax guy and say, hey, is there anything I could have done to reduce my tax bill? And then they find out later that they should have switched over to an S-Corp in order to receive this deduction for paying themselves on the tax return. So let's talk a little bit more about how an LLC can switch over to an S-Corp to pay ourselves out of our S-Corporation. If we're an LLC, in order for us to switch over to an S-Corp, we're gonna need to do two things. We're gonna need to complete a 2553 form and an 8832 form. These two forms right here are how the LLC transitions over into an S-Corporation. But one of the things that we have to understand about the S-Corp is that the S-Corp has a lot of rules. And one of the rules of the S-Corp is that you have to give yourself reasonable compensation, reasonable comp, which is a salary. Not to mention, you need to make sure that you're filing your tax returns on time, which is March 15th instead of April 15th. So when we get over into this S-Corporation, what does it mean to take reasonable compensation? What does it mean to have a salary? Well, you think about a job that you've ever had before in your life. Just think about any type of job you've had, whether it was working for 7-Eleven, whether it was being a bellhop, whether it was being a Lyft driver, an Uber driver. You were given a wage based on what you were doing, and it was deemed reasonable based on what you were doing. But if you're a business owner and you're making money, you may have an extravagant business. You may be a YouTube star. You may be someone who's behind a camera and just selling themselves online. Your business could be a number of different things. So you have to try to determine a reasonable compensation for yourself based on the income you're making, but not just the income that you're grossing. You want to base reasonable compensation based on net income after all of your expenses. So if you're someone who's making really good money, but you end up having tons of expenses to offset that really good money, you're never really in a position where you're taking a huge reasonable compensation. So let's talk about it. Let's say I made $300,000 in my business, but then after all expenses, and I had $200 in expenses, I was left with $100,000 in taxable income. Well, even though I grossed $300,000, this was my gross business income, I am not going to be able to pay myself over $100,000 because my taxable income is only $100,000. And being that my business's net income is $100,000, this is the net of the business. Now that I understand the net of the business, me, the employee, the S-Corp owner, the employee of the S-Corp, I need to take a reasonable compensation from that business that I own. And a reasonable compensation is not all of the money that the business made. It's a portion of the money that the business made. When you think about companies like Nike, Google, Microsoft, they're not dumping all of the money that they have in their bank accounts out to their employees in reasonable compensation. They're giving set salaries to set employees based on what they think is reasonable. Just like you're gonna give yourself inside of your S-Corporation a set salary based on what you feel is reasonable. Now, I understand that you're not the IRS and you're not a tax accountant, so this is where you need to partner with one to figure out what's reasonable based on your net income. In my office, we have a rule of thumb. We have a rule of thumb that it never makes sense to take less than 30% of net income from your business. So if we had $100,000 taxable income, then at the very least, we're gonna take a $30,000 payroll deduction that's gonna end up flowing over to our personal tax returns where we are, okay? However, in the business, I have now finally received this deduction that I've been looking for. And this is where some of the tax savings start really coming in for business owners who are making more than $20,000 to $30,000 a year. When you're starting to push into that 50, 60, 100,000, 200,000 and plus, This is really powerful for you because taking payroll deductions, it helps you reduce self-employment tax, 15.3% you have to pay into, and now you're only paying into Social Security and Medicare taxes based on what you paid yourself. So if we paid ourselves $30,000, we're gonna pay Social Security and Medicare tax, which is 7.65%, and we're gonna not pay 15.3% on that $30,000 or this $100,000 in taxable income. Now, this other $70K that's business income in my S-Corp, this is gonna flow over to my personal tax returns because S-Corps are flow-through entities just like an LLC. All income flows over to the shareholder of the company. But when it flows over, it's gonna get hit with a QBI deduction. What QBI deduction stands for is Qualified Business Income Deduction. And what it means is that if you have an S-Corp or an LLC, a flow-through entity, you receive a 20% deduction on any business income you didn't pay yourself. So if I have already paid myself $30,000, then I have $70,000 left in my business. $70,000 times a 20% deduction, that's a $14,000 deduction I just received by having this S corporation set up correctly. Now, what flows over to my personal tax returns is $56,000, okay? So over here, on this side of the table, I have $56,000 that's gonna be subject to federal and state taxes. And then I have $30,000 that's subject to FICA, Fed, and state taxes. In this scenario though, having $30,000 subject to 7.65% FICA, federal and state tax, with $56,000 subject to federal and state taxes, I am gonna pay far less than if I were to have total net income of $100,000, but also being subject to self-employment tax. Because as a single member LLC, you pay 15.3% in self-employment tax on net income. But net income results in you not getting a deduction for when you place yourself on payroll because you never place yourself on payroll if you're in an LLC. You can start to see how being in an LLC can start to hurt you if you don't know when to switch to the S corporation. Guys, I am going to hammer this down over and over and over again in multiple videos because every single person understands things differently, and there's tons of different ways I can break this down so that you can understand it, so you can build wealth strategically. Now, I wanna go over an example of what it would look like if you were to have that $100,000 as a single member LLC without switching over to an S-Corp. Well, $100,000 right out the bat, I know I'm subject to 15.3% because this is self-employment tax. Self-employment tax is FICA. And FICA is Social Security and Medicare, okay? Now, 15.3% of $100,000, guys, we can do simple math. That's $15,300. What's left over is $84,700, okay? This is my adjusted gross income. This now, after I've already paid out $15,300, yes, I get a deduction for half of it, but this now is what I'm subject to. So if I'm single, this is gonna put me into the 24% tax bracket. If I'm single, I'm gonna have maybe about another $18,000 come out in federal tax. And then if I'm in the state of California is about 8.5%. So I'm probably gonna have about another $6,000 to $7,000 come out. Let's just say 7,000, okay? So I had my $15,300 in self-employment tax that I already had to fork up, $18,000 in federal taxes, and then state of California is charging me another $7,000. Guys, in this scenario, I'm paying upwards to $40,000 in taxes just because I didn't switch my single member LLC over into an S corporation. Not to mention, in this scenario, this person who made that $100,000 got a $30,000 deduction because he understood reasonable compensation, he gave himself a salary, he only paid 7.65% instead of 15.3% in Social Security and Medicare, which is FICA. And then he also received this whole QBI deduction and received a 20% qualified business deduction on what was left over, net income. Now, if you guys can look at this example, it's very easy to see 40,000 versus probably far less up here. I'll do the math for you right now. So let's break this down. If we have 56,000 plus $30,000. That's gonna put us at about $86,000. It's gonna put us into the 24% tax bracket. So if I times that by 24%, it's gonna give me about $20,640, okay? Now I do need to make sure that I'm factoring in state tax as well, because I'm in the state of California. It's about 8.5%. That's about another $7,568. So in total, I pay about $28,000 being in this S corporation versus about $40,000 operating as a single member LLC, just because of this thing called self-employment tax. Now, paying yourself as an S-Corp is very unique, because when you become an S-Corp owner, you still get to take distributions, which means you can still pull money out of your bank account and deposit it into your normal checking account. You only have to run payroll one time in the year as an S-Corp owner, which means if you don't want to have payroll taxes being taken out every month, and if you don't want to have a pay stub and a paycheck being provided to you every single month, and if you don't want to pay a payroll company every single month, then you can budget your finances and do a one-time payroll at the end of the year once you know what your true net income is. So rather than having to send money off to the government without you truly knowing if that's how much you're gonna owe, you can wait, budget your finances, implement a little bit of tax planning, so that way you get to a place of having less taxes and a better financial position. Now guys, if you like this video, feel free to like, comment, subscribe so I can make other videos like this. I am going to be going over LLCs, S-Corp, C corporations, rental real estate on this page. So if you don't mind, feel free to subscribe so I can continue to make more content like this for you. And I look forward to seeing you on the next video.